Real estate is actually the best tax loophole for married couples.
I'm single. Would it be better if I was married or if I stay single?
I guess it depends on if you have someone good to marry. But for tax purposes, real estate is one of the best tax loopholes for people who are married. If you're married to someone who can be a real estate professional, then you can actually use rental losses to offset both people's income.
So then it would be better if the person that makes less was the one to become real estate professional.
Yes, and that's actually a point of contention for a lot of our clients to fight about who's going to stop working first. And the reason that's so important is because if you're a married couple and you make over $150,000 of income, normally when you invest in real estate and when you create these rental tax losses through write-offs and depreciation, they're passive losses, which means you can only use it to offset taxes from your real estate income. And for most people, W-2 income is where they're paying the highest taxes. And so the strategy is for one of the spouses to work less or stop working and then do real estate full-time. So if you have two people that are making similar amounts of money, sometimes it's hard to say which one of us will stop working to do real estate. Then oftentimes what we see is for one spouse to stop working, the taxes you save just by becoming a real estate professional is often more than what they were actually making at their job. Those are examples where it's easier for two people to decide if they're married who to stop working first. The question is, should I get married to save on taxes? It depends on the person that you might be marrying.
So what exactly is real estate professional?
A lot of people think it's just being licensed in real estate, but it actually has nothing to do with that. So real estate professional in the eyes of the IRS, you have to meet 3 requirements. The first one is you have to earn at least 750 hours in real estate. And that could be like, you being a realtor or a broker or just a landlord. You also have to have more hours in real estate than your job for that year. So it's possible for someone to be a real estate professional this year, but not next year, just depending on how many hours you're working at your job versus real estate. This is actually the hardest one for people to meet because someone who works full-time, traditionally you're working 40 hours a week, that's 2,000 hours a year. For someone working full-time to be a real estate professional, you have to have more than 2,000 hours in real estate. That's like having 2 full-time jobs. And that's the reason why this is so good for married couples, because as 2 people, you now have more flexibility in terms of how many hours I work versus how many hours you work, or maybe if I already don't work and you're the breadwinner, then there are different things that I can do in real estate to become the real estate professional. People also ask, does title of the property need to be in the name of the spouse who's a real estate professional? Because oftentimes the higher income earner is the one who's on the loan for the real estate. And the good news is that IRS doesn't really care about title. If you're married and you file jointly, the losses go onto your joint tax return. So you can offset income even though that spouse is not on title or doesn't own the LLC specifically.
Well, what if you don't trust your spouse and you want to be on the title?
That does happen sometimes too. So it's perfectly fine for both of you to be on title if you want. You'll get the tax benefits, but sometimes for loan purposes, if the lender only wants one person on title, but that person is not the real estate professional, that's also okay too. It also depends on where you live. There are certain states that are community property states like California, New York. So even though you're not on title, you still sort of own the real estate because it's community property. So if you don't trust your spouse, you're not on title, you're still okay if you live in a community property. But if you really are concerned or doubt your spouse, then maybe the question is whether you should be married to that person at all or not. So our clients, Henry and Rebecca, Henry makes a lot of money. He's an executive. He makes like $500,000 of income. And so when we started working together, they invested in 2 rental properties. Rebecca was the real estate professional. She did all the real estate stuff. She earned her 750 hours in real estate. So what we did was to do a cost segregation with just 2 rental properties. They were able to get $400,000 of tax losses, and they didn't have to pay income on all that money. So traditionally, they would pay taxes on $500,000 of income income that everything Henry made. But after claiming real estate professional, they were only paying taxes on $100,000 worth of income. So that's close to $200,000 of taxes that they saved. And that's just a lot more money that they can now use to invest in real estate.
So if you're a rich person, you should find a real estate professional to marry.
I mean, that's a good strategy. But yes, that's true. If you're a wealthy person or high income earner and you marry someone who is already a real estate professional or could be a real estate professional, then yes, you're potentially saving a lot of taxes. And one of the things I've been joking around forever is I want to start a company called realestatematch.com where we match up high income earners with real estate investors. Hopefully there's love too, but there'll definitely be some tax savings. If you like this video, be sure to hit the like button and subscribe for more real estate tax tips.